Hey, all you Wall Street winners out there. Welcome to the Wall Street Winners broadcast for April the 4th, 2022. Let's dive right in. Oh my God, this is the high point. You might as well leave now. The rest of it's not that interesting. Okay, S&P. Now, I think we're at a transition zone here, okay? It's like, my motto is often wrong, but never in doubt. I'm a little bit in doubt right now, and I'll explain why as we go through these charts. But as you can see, we had the rally up here. We broke through the previous highs, which would be a bullish sign. Technically, we're making higher highs and higher lows, so it's a bull market. But then we got this dip here, and the purple predictor is showing that the smart money is not buying. They were selling on this rally. Now, I talked about that last week, that, from a pure technical point of view, this rally should be over now. Now let's go over here. The Dow, buying and selling, absolutely neutral. Absolutely neutral. There's as much buying as selling. Let me go back over here. So the S&P broke this little mini high here, and then it broke this high. Now let's take a look at the Dow. It broke the mini high, but never broke that more major high. Okay, so not a bear trap. Then the NASDAQ broke the mini high, got to the old one. This looks more like the S&P. It poked its head up above there. Right now, from a purely technical point of view, just price action, this looks like a bear trap, and the market should start to go down. But hang on. Let's go over here. Seasonality, no buy signal, but we got a buy signal here. Remember what I told you, that the seasonality starts May 1st, but I start looking 30 days before May 1st, just in case it kicks in early. It kicked in. So we're now bullish utilities. So you'll see more and more utilities in our portfolio. Here's the thing that makes me concerned about my scenario that the market's going to drop. We're in a seasonally bullish period, and the seasonality's worked beautifully in terms of the direction of the market. It hasn't worked according to the magnitude of the move, and we have to take this chart here. The red line is the one I'm using, but we could also use the purple one, and you have to kind of bias it lower. So in other words, this rally into the end of April may not rally this much. Maybe it only rallies a little teeny bit, but it should rally. Now that's 3 weeks, 3 weeks of rally, but we've already kind of started to dip. So I'm saying we could just chop sideways for 3 weeks, and then we hit the bearish seasonality, and then we really have to be very concerned about getting short. That's got to be our strategy up very soon. Right now, I'm going to be kind of neutrally to bearish, because our long-term indicators say we're in a bear market. Short-term indicators still remain a bit bullish. So the way I interpret that is short-term bull market in a long-term bear market, and that's the way we've got to play it. Asset allocation explodes up. So why is the market even going up with all the bad news in the background? Because bond traders have even worse news, and they'd rather be in stocks than in bonds. But at the same time, they don't want risk. So what are they doing? They're buying the utilities, which I already told you about a week ago. They want low risk stocks, but they want stocks, not bonds. So that usually means utilities. It usually means consumer staples. And then sometimes there's special sectors that have short-term factors like energy right now. Global shares, worse than any of the American companies, because why would you buy European shares? Their economies are worse than the American economy. Now here we have, as I say, look at the yield curve. Here it is here in the lower left. I mean, that's flat. That is a signal that a year from now, we're going to have a recession and a major bear market. Now, this is the 2-year note. This is the 10-year. Where's the 10-year? The 10-year right here. So 2's 10s is now negative. It's predicted 14 out of the last 18 bear markets. The one that is even better is the 3-month versus the 10-year. You can see the 3-month 10-year is still very, very sharply positive. And even if the Fed raises interest rates the way they say they're going to, it might take 2 years before we would see a negative yield curve with the 3-month versus the 10-year. But if we do, That would be 18 out of the last 18 recessions. That's 100% accuracy. And that was the foundation of my amazing call in March of 2019, where I said we're going to have a bear market in March of 2020, which we did. You think it was caused by COVID, but I know it was caused by the yield curve. And I'm right. Yes, COVID was a triggering factor, but it was going to be a bear market anyway because the yield curve is a great prognosticator of the stock market. And there's economic reasons why. Okay, this affects people's behavior, and that's why it's such a great indicator. So this is telling us that a year from now, in March of next year, we could have a significant bear market. This is not a bear market indicator for tomorrow. It's a bear market indicator for at least 6 months, okay? But a year is kind of a sweet spot as far as the prediction is concerned, but it could be as early as this fall. Bonds, you can see, even though they were going up, and even though the purple predictor is going up, that tells us that the smart money is buying, but the dumb money is selling bonds, and you can see it all right here. Bond key factors are pretty much skyrocketing, telling us that we should see higher long-term interest rates. Okay, so that would make the yield curve more positive, but the treasuries have hooked down. You can't see it very well there, but there's a little hook down. Yields have actually come down here. Dollar, you can see I drew this rectangle formation with my incredibly steady hands. Just pretend those are horizontal lines, would you? Okay, so we have here what's called a line or a rectangle formation in here. Typically, they're broken out in the direction of the previous trend. The previous trend was bullish, so typically they'll be broken to the upside. That would be a major buy signal for the US dollar. Now, if the US dollar is going up, then that probably means gold is going to start going down. Okay? Strong dollar, weak gold. That's the general rule of thumb. So we still can't get excited about it. Then we look at our key indicators. They're neutral. So we still can't buy gold, okay? I want to buy gold, but I can't buy gold because my rules tell me it's not a bull market. Now, crude oil, I think, is going to do much the same thing. What we've got is a situation where everybody's trying to get the Middle East to pump more oil, but the head of Saudi Arabia, Mohammed bin Salem, MBS he's called, he's the crown prince. He's not even taking Joe Biden's phone calls anymore, okay, because he doesn't like quite a few of the things that Joe Biden's done. So he's not even taking his calls, okay? What about the Ukrainian situation? So Russia is obviously producing as much oil as they can. They're having a harder time selling it, but they will sell it. It might be they sell it for rubles in China. So it'll take a little longer to get to market, and the Chinese will buy there instead of from Venezuela and other countries. So their oil is going to get onto the market. Don't even think that it's not. But it'll take longer. So we're going to have a little bit of a hiccup here. That should reduce supply. But one of my scenarios, I just showed you the yield curve, but there's other indicators as well that are saying the global economy is slowing. If the global economy is slowing, then the demand for oil is going to go down while we're in a steady state of supply. That's a bit bearish. So that's why the price of oil is no longer spiking up. It could go either way based on future news, but right now I think it's just going to be pretty stable. Now, Bitcoin is following the stock market. It's really a proxy for the NASDAQ now. You could trade NASDAQ, Bitcoin, it's the same thing. We got the breakout here. I told you about the purple predictor being bullish. We got the breakout, so I need to be bullish. I actually bought Ethereum and then I got out, so I had a little losing trade there. But nonetheless, I'm going to be a rebuyer if it breaks to new highs. So I'm a bit bullish here on Bitcoin. I bought Ethereum. I think Ethereum's a little bit better than Bitcoin. But either way, they're 99% correlated. Okay, freebies, you know the drill. You want great trades? You go to stockbutler.com. You want all of my trades? Not all my trades. Most of my trades? Then you need to go to Wall Street Winners 2021 and become a fully paid up member. And we saved a seat for you in the cafeteria. Talk to you all next week.